Hi everyone, this is Camille. As the mining revenue of Bitcoin will be halved soon, Bitcoin transactions are growing in both spot and contract market. Meanwhile, option trading is becoming an essential part of crypto transactions, as trading markets such as CME and BACT are on the way to support options for cryptos. So in today's video, I'm going to guide you through options, a derivative for cryptos, in simple and plain words. And I also want to explain why I prefer options of OKEx than any other leading crypto exchange. First, in options trading, both parties of a transaction will be positioned to exercise their rights respectively when the agreed time arrives. By saying options, we mean that both parties enjoy different options of price and timing for wielding their rights. The reason why options are beloved in financial world is that it is a derivative with controllable risks but high returns. There are four notable things for you to remember. We can both call and put an option by our own judgment of the market. The time to carry out a transaction is optional. The price of an option contract is dependent on exercise price, which can be different. The completion of an option transaction does not necessarily say the rights must be exercised. You can sell your contract at a higher price to earn money without exercising it. Therefore, a traditional option market, an investor is free to choose his personal favorite and trade it at a preferred time. But as a beginner, you may still be confused about, say, exercise price, contract price, and other concepts. But there are two advantages of option over futures that I want to tell you. First, earn big with limited principal while the risk remains controllable. Let's say I have $10,000 at hand. The current price of Bitcoin is near that, and I think the price will go up in 2 weeks to at least 12,000. So I buy in a Bitcoin now, and hopefully I can earn 2,000 by selling it at 2 weeks. But in spot markets, it is only feasible when I am a bullish investor. If I put, I don't have any space in a spot market. Under these circumstances, if I put in 10,000 and price goes down, my capital will be tied up or compromised if I choose to sell out. But in options trade, for the same level of expectation, the principal needed will be much smaller. If I also have 10,000 at hand, I can buy an option on OKEx at 10,000 exercise price that will be executed in 2 weeks. When this price of Bitcoin rises to 12,000, I can exercise my right, thus earning 2,000. And if not, I can waive my right at $40 loss. As you can see, the edge of an option is that when the contract is due, I can earn without the need to buy in the stated amount of Bitcoin, which means if I put 10,000 into the option trade and when Bitcoin goes to 12,000, my earning will be 2,000 times 250, which is $500,000. That minus the principal, my net yield will be 490,000. If the market doesn't act like what I anticipated, my loss will be the option premium. This is why we say options can be high return and controllable risks. An option investor can leverage freely and need not to worry about being liquidated. If I already hold a considerable amount of Bitcoins, options can hedge me off bearish risks without compromising the earnings when the market is bullish. Take the same old example. If the price of a Bitcoin is $1,000, even though I see Bitcoin rockets to 25,000 just like Tim Draper did, I still worry about BTC would plunge sometimes in the following 3 months. So I buy a seasonal put option in OKEx. I can sell my Bitcoins at 10,000 no matter the price will be when the contract is due. So I invest $40. There will be two situations after 3 months. First, Bitcoin plunged to 7,000 or 8,000, I can sell my Bitcoin at 10,000, but the premium is not refundable. Either way, Bitcoin rockets to 15,000. I choose to default. Though I lost $40 premium, I hedged the risks while still maintaining my earnings. Buying options is a very good way to put. It can be seen as an insurance to your holdings. When we trade in market, what we least want to see is an endless sagging market, such as what we lose the space to cover the short positions. If we buy put options to hedge off the risk, we will weather unexpected slumps. Let me conclude the advantage of options. First, leverage up without being liquidated. Always got a chance to make a buck as long as the contract is not due. Second, earning in bullish, bearish, and fluctuant market. Third, diversified strategies. There are many optional strategies that can be made, highly flexible depending on the size of your holdings. A very important feature of option strategies is that you are crystal clear about your maximum gain and loss, which is merely possible in a spot or futures market. 4. Realize stable cash flow in mature option products. We have seen that in the field of cryptocurrency. It is a shared view of establishing an exchange that supports a full range of derivatives. With leading exchange developing options business, OKEx launched a sophisticated option trading business last year, and is also the first to support the full range of transactions in leading exchanges. While some small exchanges also have launched option products to gain an edge in the competition. And traditional financial markets like CME and BACT also have been developing crypto options. From the perspective of option standards, strategy configurations, pricing models, and risk control, OKEx option market is much safer and more sophisticated than other markets. OKEx options are based on BTC and USD index. It is an European type of option that is widely adopted. It is easy to understand and get started. At the same time, OKEx can support a variety of strategies, which means that when the market is highly fluctuant, you can buy the trend. And when the market is calm, you can use a mild butterfly type option combination. Everyone can find their preferred configuration. More importantly, OKEx option contract allows both parties to quote freely, greatly improving freedom and transparency. Meanwhile, transaction price can better reflect market expectations. The settlement price of OKEx options is based on the average index price of multiple exchanges. That is to avoid closing price manipulation. When an investor is liquidated, an internationally recognized option price model, Black-Scholes model, will be adopted to calculate the market price. In addition, OKEx adopts a big data and AI for risk control and adopts clustering, classification, regression, and other methods. It uses K-means, GBDT, and other models to analyze and build tens of millions of users' behaviors. As one of the world's top 5 exchanges, OKEx liquidity and market depth are self-evident. Whether you are new to option trading or a veteran investor good at managing your own or institutional digital asset, a mature and complete OKEx option market will be a good choice. In the crypto market, there are many products to choose from. The biggest thing is whether we have enough knowledge to make use of every tool. The market keeps changing and will not stop forwarding because of the personal gains and losses. So I hope everyone should be cautious, be professional, choose reliable tools, and become a very successful investor in the end. And thank you for watching. This is Camille on FinTech.
你也可以在 YouTube、哔哩哔哩和喜马拉雅找到我哦。